Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So it started off as a pretty giddy day. A lot of things happened quick. A lot of the stocks that we've been tracking had big moves. Market really wasn't doing much, so I feel like we were a little sidetracked. One thing that traders hate, including myself, is when stocks close well off their highs. It always feels painful. It's the same way, when you're a trader and you have your P&L and you're up a certain amount of money, and if you pull back like 25%, it always leaves you feeling so upset. I know for me, I'd rather have not been up that money to give it back and pull off the highs. But sometimes it means something, and sometimes you just have to put it in perspective. Because a lot of the stocks that we were trading, the charts haven't changed, but they got a little extended intraday. And then by pulling off the highs, if you chased it or if you added a tier in the wrong spot, you definitely got a little spun around. If you look at the chart of the spiders today, really not much action. Here is this upper floor. Here we're going sideways. It really felt like we pulled in really hard, but in all actuality, this is what we did today. We were as high as, let's get my little Quotron up here. We went as high as 140.65, and then we still didn't even think about testing or breaking below this floor. And as we go sideways, you could see the 10-day moving average is curling back in. And this is the same 10-day moving average that we pretty much tracked, besides right here, this entire move before we closed below it for what this was a very mini short-lived sell-off. So with that said, as we go higher, it's always a little, there's anxiety about holding things because you never want to be caught in what could be a flash down move. And yesterday, we opened up down 7 or 8 handles, and you look at how we closed yesterday, all in all, it was very constructive. So at this particular point, this is the floor that we've been building, and all in all, it still looks fine. Now, I think we're all getting a little edgy, including me, because we're watching things so close, because everyone out there keeps calling for this major pull-in, and nobody wants to be the guy who chases excitement, gets caught with his pants down, and gives back money, on their day, their week, or their year. So, it's okay to be a little edgy, but it doesn't mean, just pull the plug and run for cover every time you see a little bit of a pull-in. Now, Apple is an example. Apple pushed through yesterday's high and then closed back below it, and it has a little bit of a red bar, and everyone's like, well, what happened to Apple? It's just down $3. It's okay. I know in our Twitter sphere or on the site, that feels like a lot, but in actuality, it's really nothing. Okay, look at this. This is what everyone got all worried about with Apple. It's like a nothing day. It's like an inside day. You could say on a micro level, okay, this is, it did a little bit of a push through failure, which in actuality, not really. It went through this high here of 606.90. So if you were short, you got squeezed, went as high as 609.65 and came back below. So all in all, not the biggest deal whatsoever. Some guys, if you wanted to go home short, I think it's risky because, the news, everyone keeps upgrading it. But if you were to do something based on the week close, the real book would say to probably go home a little short if you had to. I don't think it's a great setup. I think that, we could retest this area. They could shake it up a little bit. But at this point, small little micro day. To the downside, yeah, it didn't close on the highs for the first time in a while, but rightly so, it's fine. You look at the 3-minute chart, and it was really tough, as far as the intraday action. I didn't even trade Apple today because all of our other stocks had, some better setups. But when you get something like this, at the end of the day, a sneaky sell-off, because this definitely hurts. If you were sitting here saying, oh, I'm long Apple, it's looking great, you had a nice wide range bar right here at 607, consolidating most of the day, at 3 o'clock you got blindsided. So it does feel like something must have happened to Apple, but this is what programs do. This is how people get you out of positions and somewhat out of the market. And who knows, maybe this little sell-off does mean something, because if you were long it hurt, and if you saw it break this range and get out quick, you had your stops, and you're out of the way, and we can see what happens tomorrow. But on a micro level, this is definitely something you had to be watching as it started to test this little micro floor before breaking to the downside. For me, when I saw Apple go red, I threw on some Qs as a short, which I haven't been short the Qs in a while because I've been like short the spiders, short some stocks, and long a lot of the positions I like. So I'm like, you know what? If Apple's going to open up down tomorrow, the futures will be off, and I might as well be short the Qs instead of having the risk of shorting Apple overnight, because I don't need to deal with that right now. It's been a very methodical month. It's been a great year. There's no reason to get blasted with anything. So at this point, the prudent thing to do, seeing some of these things close off their highs, was not to abandon ship, but get to a tier 1 and maybe have a little extra hedges on. We were up this morning, and like they didn't treat Oracle really well. This morning I was in here with Stephanie, and she's like, I would sell this up open in Oracle, and I agreed with her, based on where it came from the last quarter. And it just shows you how you need to approach these things the right way. And if you look here, if you look on a micro level, besides once you gapped up here and it engulfed, this entire bar in the first time period here, this just showed you that this gap meant nothing, that you better beware. And then you had this little micro range here that below this prior low, which is then resistance, and didn't even think about bouncing up. Then people started leaning in it, and it was a great short the open. 31 and change on the decent report, I guess. It was a place to sell it, and then it wound up going lower and bleeding the entire day. And now if you look at the daily chart, looks like a not so great, right? Big tail, closing on lows of the day. So it just shows you how you have to know where these things have been, because last time, look, remember here on the bad report, it gapped down, and if you shorted it on the gap down, you lost, because you saw that it wasn't at the highs, it was into big support, so you said, I have to buy this down open. So it just shows you how Wall Street tries to trick you. On this big down open bad report, it was actually buyable, because look at the old support here, double bottom, and then it started coming all the way back up for no reason. And then on this, what was supposed to be a decent report, that if you listen to the media all day long, it was up, and that was a sellable event. So here they bought the bad news, and here they sold the good news, and that's why people at home start to wonder, how can I make money in this business? So that's why you have to tune into people you trust that could give you a little bit of guidance. And this morning, not to toot our horn or our horn, but it made sense to sell it, not chase it. As far as like Baidu, just to show you time and place. Baidu was on our radar, a few different buy prices, one of them being 139.20, another being 140.60. And if you look here, this is the downtrend that we've been talking about, and couldn't get through here. This was pivot number 1, when it broke through this little micro barrier, and this here, that price was what? 139.20. That's when I got into my first position. Then the ad was right here, once it got above like this 140.50. And then it did get as high as 142.85. And did it pull off the highs? Yes. This chart does not look bad. It does not look broken. It doesn't look like it was a bait push-through failure. But it closed off the highs, and that's a little bit painful, even for me. And I had some positions left over, and I sort of traded it pretty well, where I got in early and I sold some into strength. But then when you buy it back and it closes near the lows, it's just very frustrating as a trader. And if you're a trader, you know what I'm talking about. If you look here at Baidu at the 3-minute chart, you'll see how off the open, it still was a little choppy, to be honest. That's why I don't really like this stock. Here was your first move. It came in, they tried to bring it lower and they couldn't. If you were quick, you bought this 139.20, which was 1 point, and then you made a little bit of money. You could have sold into it, and then once it pivoted here and held, this is really where we got aggressive, right through this 140, and then from 140, it went as high as 140.98. So if you bought 139.20, or you bought here and you added here, so just say this is your tier 1, this is your tier 1. If you went to tier 2 through this pivot, you could easily sell for cash flow into tier 1. So if you did so, you made money on your cash flow trade, and you had a decent price. And if you did that when it pulled in, you weren't as upset or worried because you didn't chase it. You booked some, and you're right back to your cost. And should it have not pulled in so much? I think so. If it was really that strong, it probably would have held right here, but it's Baidu. And then from here, it wound up, if you just stayed in tier 1 because you already sold some and said it didn't violate your price, you trended higher and you made some money. But then obviously made a new high in the day, and then at the end of the day, there's nothing really you could do about that. That kind of that's, if you want to say a bad word, that sucks. Anyway, this was a big move lower, closed near the lows. It took out a lot of the afternoon work, but it doesn't mean you get flat Baidu. You just go home with a little less, and that's what I did. I'm still long Baidu, but I went home with a little less because I did not like the way it closed. It didn't close with power through this price, so I said, okay. Same thing with Zynga. Zynga was a stock that we bought yesterday. It perked up, and then it was looking strong. I'll tell you, then the news of the conference, 3 o'clock, shorts got worried. What are they going to do? They wound up acquiring another company. Tweeted that I sold some above 14.20. I didn't care how much higher it can go, but if you bought it at 13 and change and you added a 13.40, because I think we said when we were going to tier 2, above 14.20, big move for Zynga. I just sold some, and then I was in a meeting and came back, and that too is frustrating the way it sold off the high. So depending on where you bought it and how you traded it, some people made a lot of money, and some people chased the excitement and went negative on it for the day. If you look here at Zynga, it's still fine. Okay, if you look at it, this was where we started accumulating a little bit. This is when it broke above this area for some strength. And then where'd it go? It went right back to this prior resistance of the top of this channel. Not ready to break above it yet. It still didn't come out with its secondary, so it pulled off. But now it just becomes a B-list type of trade while it has to go a little sideways for a little while. So if this were to hold higher, okay, and hold up here a little bit more, or hold the middle end of this channel, I would say stay with it, and then next time it gets up to this area, perhaps it takes it out. But for today, coming from 1280 all the way up to almost 1444, it just wasn't ready to break through, so you have to trade around it. So same thing somewhat with SanDisk. We started talking about SanDisk. Melanie, great call in the chat. Sperling was all over it. We haven't traded it in like 6 weeks ever since they came out with that bad quarter, or not enough to break out to new highs. It's been on the C list or D list, and then it's been accumulating and creating another pattern. So today I'm like, ooh, guys like SanDisk. It looks good to me too. Maybe there's enough time that this quarter they're better, and it's it's in better hands. And there were like 3 different buy prices. There was 3 different highs to use as pivots. And before I go into the chart, just so you know how I remember numbers, the first high of the day was like 50.95, and then there was another high at 51.25, and then you had the pivot of like that 51.40, before it actually like squeezed through. So for me, the way I traded it was I got in my tier 1, my feeler, okay, when it woke up and it was like a 50.80. I added through that high of 50.95, went to 51.25, sold a little bit, came back in, held in well, okay, stayed with my tier 1. Then it went through 51.25. That was the next add through that high. So you're now back at tier 2. Went through 50.41, and then when it went above 51.50 and change, I'm like, you know what? Let me sell some, because I had 2 good buys, but I'm going to stay with some. So I create cash flow twice in that trade. Stick with one. Went as high as 51.80. Pulled in off the highs, which again, as a trader, it's frustrating when momentum stocks pulling off the highs because you don't close in your highs, and it's not fun to see your P&L come lower. But all in all, it's still up like 3% or 2.5% on the day when the Qs were down. So it's still fine. So if you look here at SanDisk, here it is. If you look at the chart, still looks just fine. Yes, it closed off the highs, but it did clear this area. You do have now a huge channel, okay, between 46 and the highs here of 52. So all in all, technically still fine, even though it closed off its highs and your P&L was off its highs. If you look at the 3-minute chart so you can see what I was talking about intraday, here you go. Okay, so this is how I managed the trade. I didn't even catch it until right around here. Okay, right in this trade, I think people were talking about it. I tweeted about it. I'm like, ooh, SanDisk looks cool. So I got into tier 1. Okay, went in and put a high here. This high was 50.95. Then it pulled in. Okay, it held halfway, or the top third. So I was like, okay, this is acting well. I'm in tier 1. If this takes out the highs, I'm going to tier 2. So I bought more through 50.95, probably maybe in tier 2.5, and then quickly went to 51.20-ish. So I said I'm going to sell some. So I sold some into this area. But I'm still holding from 50.80, but I traded it through, and I got back to a tier 1, came back, retested. This was another buy price through the 51.25 high, and then went as high as this. So if you sold some, then you added here. I said, why not take a little bit off again into 51.56, because I just added here at 51.25. And then I stayed with tier 1, went to my meeting. I didn't sell any into this strength because I wasn't there for it. And and then this pull in at the end of the day, a little frustrating, but it's still fine. Look, it's still up 2.5% for the day. So it all depends on how you maneuvered this range. Okay, and I maneuvered it well, not perfectly, because obviously I didn't sell up here, it wasn't on my desk, but by buying it here adding here, selling here, adding here, selling here, and then holding throughout the course of the day. I was able to hold my tier 1 all the way from here. That still is up 50 cents on the day, and you had 2 cash flow trades in the middle. So that's a little explanation of the tier system intraday and how you can understand it if you're not a member of the site and you just see us, in other areas talking about it. So that's a way to stay with some of the trade and create cash flow by day trading while holding other things, so you can make money intraday just in case things close off the highs, because that happens at times. So as far as some of the financials, they're resting. Guys are really enamored that JP Morgan on the daily chart couldn't go up again. Everyone's like, it's tired, it's ready, it's done. Look at the day that JP Morgan had, a little day like that. Granted, this is the upper floor, and this is some of the supports that I drew earlier in the week. It's still just fine, hanging in there. It doesn't have to go up every single day. It just shows you how so many bears are just trying to point to something. But anyway, still looks fine. Hard to chase up here, because you do know that sometimes these ascending type channels do get resolved to the downside, and if this does, you could see a bit of a correction to the 10-day moving average. So at this point, I think you almost avoid it versus chasing it and buying it, and if you want to short it, just got to be careful. Same way with Goldman Sachs. Just an inside day, still held the flag breakout, still holding here, so it's still fine. It's just a day in the life. Nothing too dramatic, still well above this prior breakout resistance area. So with that said, today was just another day that you had certain patterns triggered. You had some extend further than maybe they should have went, so they pulled back. You had stocks close off their highs, but not too drastic. LinkedIn also pretty frustrating. We had it overnight. We've been focusing on it. Goldman put it on their buy list, and they gave you a trade intraday, but it wasn't great. Right? That's why we would have liked if we were able to trade it through 95 or so. But when you look at LinkedIn now, still actually looks pretty damn good, right? It did close through this major resistance area. You put in the volume, go to the basic studies, put in your volume. You'll see that the volume today was strong, right? Strong volume, but it closed off the high, so it's it's just painful, And then when it traded through 100. It only went to 101.11. So unless you took that trade for $1, which it's hard to do for $1 in LinkedIn, it was frustrating, especially if you came in and you added to your average cost and lost a little bit. But all in all, still powerful, still looks good. Just close off the highs. You go to the 5-minute chart, you'll see it's a little bit more dramatic, where not much opportunity here after the gap up. So if you didn't make much money intraday in LinkedIn, it is what it is. You had an initial move. And then I guess right here was a decent trade. But then if it would have went to 103, 104, we would have all made a lot of money. Instead, it went through 100, came back below, and now we're going to have to see how it handles this gap in the next few days. So with all that said, you have to micromanage your trades, and you also have to just macro manage your trades. And you can only do that based on your time frame and based on your commitment intraday, whether you're using a tier system or whether you're just holding, and what your time frame is. Traders have had a hard time with Google, but investors are just fine with Google. Beginning of the year, stock of the year, within the first 3 weeks, I had traders bashing me saying, your Google trade of the year is against you. How are you going to ever recover? I'm like, it's the 3rd week of January. What's the big deal? It's 1 quarter. You could now buy more. You could buy at the 200-day. You could accumulate a little bit more. If you're a macro investor holding through earnings, you could obviously take the pain and average a bit more into it. So if you look at Google on the daily chart, it's had a really nice move. This was the earnings, and they were perceived to be a little weak, came in, tested this prior support, and we were talking about buying it into the 560 area, and if you did, you brought down your cost. Here was your nice trade into the gap, sideways channel. Here as a trader, you could have made some money as it started to act better, and here's your extension, and now it probably needs a little bit of time. But overall, I'm being adamant. There are a few things I'm always adamant about, and it might not be in the next week, but within this year, I fully expect, in my opinion, that Google takes out this high. It's just a matter of how it does it. So you have to know your time frame on whether or not you can deal with it. And now to wrap it up, because I got to wrap it up, I got to get my son from daycare. It's 4:30. Tomorrow, we have some more economic data. I would say be light overnight, be hedged, stick with your positions, but use that tier system to book some cash flow. And if your P&L didn't close on the highs of the day or your stock didn't, I know it's frustrating. It was frustrating for me too. Just let it roll off your shoulders. See you in the morning. Have a good night.